Market is now closed.
How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to tonight's broadcast called Chinese Communist Party Economics. What's happening in the Chinese economy, and what are the market trading opportunities that we might use to exploit these? Good evening, Seth Julian, says Joy F. Nice to see you, Joy F. Thank you. I assume you can hear my voice, see the opening screen. I would ask that just a couple of other people so register so that I know that more than Joy F can hear, and we'll get underway straight away. In the meantime, let me introduce myself. As I say, my name is Seth Julian. Alex, Anders, great. New people, lots of new people in today. Yes, can hear you loud and clear. Beautiful. Joy F is joyful. I like that. Very well, great, that's good enough. My name is Seth Julian. I'm 65 years old. I've been trading in the capital markets now for 52 years. I started out as a young man trading stocks, and I have been trading continuously ever since. I have a degree in political economy, an advanced degree in international trade and economics, and an advanced degree in management and finance. I started my career out in the early 1980s working with an outfit called Bankers Trust Company on Wall Street, and have since worked for two other international trading houses, and currently I'm the chief global strategist here at Alvexa. Now, the only protocol I have in the room is that I ask you to please ask your questions in real time so that we can have as much of a dialogue as possible and avoid any unwanted and unnecessary comas in an unwanted monologue. So with that, ladies and gentlemen, let me get underway. So please ask your questions in real time, and here we go. Now, Now then, and my usual procedure is to go through a prepared text to give you some background, set you up, and then we'll go to the real charts and take a look at what the opportunities are. I must tell you that usually, because I've changed the hours of these sessions to be more comfortable for our audience, that is to say later, a lot of these assets are not available. We'll try, but we might not be able to get fills in any of them because none of these markets are open right now. Anyway, let's get underway. Understanding the Chinese economy requires more than the usual fundamental economic and financial metrics. China is a single-party authoritarian state run by the Chinese Communist Party, henceforth the CCP. To properly understand this entity, Chinese politics and political history needs to be in perspective. China is a vast, rugged nation with the world's single biggest population of over I think it's actually close to 1.4 billion now citizens. Now, let me repeat that: 1,400,000,000. The point to the right of the decimal place is bigger than the United States population. Okay, and that's less than 25% of the Chinese citizenry. The history of this ancient and highly accomplished nation is long and diverse. For most of the last 700 years, much of the technology in use by mankind originated in this land: the compass, the fishing reel. I don't have that pictured here. I'm an avid fisherman. The fishing reel was invented by the Chinese and significantly impacted the protein intake of mankind for millennia afterwards. Gunpowder. All these Chinese inventions contributed enormously to the advancement of human civilization. Clock, construction over very rugged terrain. Is that they farm this rugged terrain. All right, these are ingenious people. Now, the history of China is comprised of 4 distinct elements. In fact, Chinese recorded history does not begin at a particular point in time, but rather at a particular point in the trajectory of these 4 elements. The first is a state of chaos, anarchy, where there's no rule, no order, no law. Banditry is rife, with little or no possibility of saving a village or a town or a city's agricultural surplus for investment or even for a bad crop. This because it's stolen. This phase then gives way to local warlordship, where perhaps a village and or a town maybe gains some degree of stability thanks to the rise of local forces capable of imposing law and order over the local population and warding off bandits and criminals. As this phase progresses, government over larger areas grows until a national unification of rule takes hold and prosperity can take deep root. This phase has lasted, in the case of particular dynasties, for centuries on end. There are many, many dynasties in Chinese history that last for multiple centuries. However, as the inevitable Chinese consequence of success and prosperity comes corruption, bringing along with it a decline in the respect for and subservience to the prevailing rule, causing a breakdown in law and order, wherein the cycle eventually begins to repeat itself. Now, yes, that's oversimplified. If any of you have ever tried to read, let alone master Chinese history, it's enormously long and complicated. Dynasty upon dynasty, reigns. It's ancient. It's ancient, goes back a long time, and it's still in business. But that sequence of events is well known, certainly to the Chinese. Now, we are currently in the phase of prosperity, where the government of Premier Xi is battling corruption and seeking to sustain the tremendous gains made in the post-Mao era, which was initiated by Mao's real, as opposed to the Gang of Four interregnum, Madam Chiang, Mao's wife, successor Deng Xiaoping. Now, a little bit of background on that, because I want you to understand it's important, if we're going to be trading in Chinese assets, to understand what we're talking about. It's a foreign place to most of us, and it's important to learn about what we're dealing with. When Mao died in 76, there was a brief interregnum where his wife, Madam Chiang, and the Gang of Four took over, but they were thrown out quickly. And Deng took over with, I might add, in an unusual historical point, with no other title more grandiose than the chairman of the Chinese Bridge Association. That's it. That was his only title. The chairman of the Bridge Association. The card game, that is. Now, when one of Deng's reforms, because he had suffered greatly, as did millions upon millions upon millions of people in the insane and absurd Cultural Revolution, was to free the economy. Let people be free, let them produce, let them be free to manufacture and do as they pleased economically. And the quid pro quo for that was that the Chinese Communist Party would rule unrivaled, which they do to this day. So much money was produced, and the government collected so much and redistributed, that corruption was rife, and it is to this day. The loss of faith in the governing regime is the pinnacle fear of the CCP. Make no mistake about it. They don't fear the Americans. They don't fear the North Koreans. They don't fear anything other than their own people. For it knows all too well where it can lead. Its ouster from the levers of power. After all, the essential governing principle for the last 46 years has been that the CCP will allow economic freedom, and to the degree that it leads to economic prosperity, in exchange for unrivaled monopoly of political power. In essence, it's the old Soviet social contract of the people leaving leadership and management of the political echelons alone, in exchange for which the political system would leave the people alone. In essence, but in point of fact, it is more complicated than this caricature would indicate. There are more than 10,000 demonstrations every year in mainland China against all kinds of upsets and disgruntlement. You don't hear about that very much because the CCP has built an enormous web of surveillance and control over its population to suppress the protest against its rule. I read recently where the number of closed-circuit television cameras is over 190 million. They're coming into, and they want to get to about 230 million CCTV cameras. So what do you think of that? How's that for creepy? That's where they're going. This it fears nothing so much as the unraveling of the fabric which keeps the very fragile society together. And I'll give you one example. When Deng Xiaoping died in '89, students gathered in Tiananmen Square because they wanted even more freedom. The freedom that Deng had granted them, not surprisingly, engendered the desire for more freedom. And this is one of the fatal flaws, in my opinion. And one of the fatal flaws of this social contract is that people who prosper economically will not want political freedom. My answer to that is the standard wrong answer buzzer. No, that's just not likely, because what they do when they become wealthier is to want more freedom. So that demonstration in Tiananmen Square grew over the months to literally tens of thousands of people, and the government didn't know what to do until they decided to do what to do. They cracked down. They shot thousands. Well, the numbers range from 1,000 to 7,000, probably way more than that, of their own citizens dead to quell the dissent. And quell it they did. We hadn't heard anything from Tiananmen Square since. Nonetheless, there are many, many demonstrations that take place, and those people who do demonstrate against the government are very brave. But make no mistake, it happens. Now, while the Chinese economy recently overtook the Japanese as the #2 in the world, and there are those who say that they're gunning for the #1 position very shortly, the picture is more complicated. Adjusted on a per capita basis, which is how GDP per capita is, GDP is always per capita, it's roughly $7,650 per capita. This gets the country a ranking no higher than 91 among the nations of the world. It's below Portugal, I believe, or somewhere near Portugal. Below Portugal. To provide its people with the next level of economic prosperity, with much more of the nation having risen out of the ranks of abject poverty, where so many of them were a mere 30 years ago. A mere 30 years ago, when I was a younger man. And when most of you listening studied anything about China, at least before Deng, I remember quite distinctly when Nixon went to China in '72, there were 3 Mao suits. Everybody wore the Mao suit. It was either the beige, the black, or the dark blue. They all had the same haircut. They all rode the same black bicycle, and that was it. That's all you saw in cities. People with the same haircut, wearing Mao suits, driving black bicycles, which are identical also. They once used to say, Mao said, it's a famous quote of Mao's, that just to make the caps on the shoelaces, I forget what they're called, there's a name for them, finials, I think, was a major undertaking for the Chinese economy, because they had required billions and billions of those things. Think about that. That's how backward they were. When we say that globalization lifted billions of people out of poverty, we're talking to a great extent about the billion in China. So they're going to have to continue delivering significant economic prosperity, except they ain't doing it. Now, I want to show you this chart from The Economist, assembled by Gavikal Dragonomics and Haver Analytics and The Economist, and I took it from The Economist. This is an index starting in 2019, which means in 2019 it's 0, it's 100 rather, and then up or down from there, and that's a mere 3 years. Industrial production has risen, but is falling. Retail sales are falling. Exports are still rising, but fairly slowly and turning a corner here. And property sales are in the toilet. They've actually shrunk. Such a complement is going to be decisively more difficult given the particularly stiff headwinds for doing so created by the party's own seriously wrong-footed policies. In fact, the IMF, that's the International Monetary Fund, just this week significantly cut its forecast for Chinese economic growth to well under 3%. Now, this is an economy that has been growing for more than 15 years at more than 6% per year. That's the kind of growth that India has been achieving. And India has as many people in China and will shortly surpass it. And India is also deeply backward, but it's growing and it's rising. But India has one advantage that I believe will win out. They're free. It's corrupt. It's backward. It's slow, but they're free. They have elections that matter. It's a big, big difference. And in the end, I think that's what's going to win out. But that's my opinion. I could be wrong. The 3 principal headwinds facing Chinese economic growth are, number 1, the crackdown on big tech. You may have seen that. When we take a look at the charts, you'll see what happened to Baidu and Alibaba the zero tolerance COVID policy that's taking place now, which is a total disaster. I'll go into detail in this in a moment, and the housing crisis, all of which have the distinct imprimatur of the current leader, Xi Jinping. Not known for his policy shrewdness, but rather for cultivating loyalty, and this is the want of the authoritarian strongman everywhere around the world. He's facing what looks like a sure confirmation on October 16th at the 5 years, every 5 years, another 5-year term, and likely confirmation of a lifetime job tenure. Now, this is a departure from the norm that was set in place by Deng and observed by the last 5 premiers in direct response to the disastrous policy blunders by the great helmsman, aka Mao, and his rule for life. Mao was a disaster. Undeniably, the worst decisions ever made in human history were made by Mao. I'll just give you one example, and there are plenty of them. In Mao's Great Leap Forward, in an attempt to raise crop yield, he mandated that the people get rid of sparrows, because sparrows used to eat the seeds of the crop, and it damaged the yield. So the country, as is what happens in a dictatorship, rounds up all of the nation to mobilizes the entire nation to kill all the sparrows, which they did. They did a fantastic job. They were alleged to have killed 300 million sparrows. What ensued, though, and they didn't realize this, of course, because Mao was also not the sharpest knife in the drawer. He did rule, but he wasn't the most brilliant. The sparrows ate locusts, and once the sparrows were gone, the locusts devastated the crops, devastated them. It's reckoned that between 30 and 50 million, let me repeat that, 30 and 50 million people died of starvation in the Great Leap Forward because they didn't have enough food. And that's just one example. Now, let's talk about the crackdown on big tech. Now, this is not such a radical idea in and of itself. The big Western democracies are also carefully considering reining in their megatech gargantuans, controlling untenable rent collections, which these guys do, they're monopolists, with the accompanying accumulation of unacceptable levels of wealth, as well as undemocratic and generally viewed unfair exploitation of their populations and their rights to privacy. Meta, aka Facebook, and Google and Alphabet have grown from the fact that they take what you do on the internet and sell it to people who want to know what you do on the internet. Do you get any benefit from that? They maintain, yes, because you get to use those products for free. No doubt it's a benefit, except you don't get this benefit from any of the economic trickle down. That goes right into the pockets of these companies and the people that sell you. In other words, what would be good if I said, okay, I don't mind that you track me. I see you saw that I was looking at shoes, you're advertising the shoes. I finally buy the shoes. Give me some of that money back. Lower the price of the shoes. No, they don't do that. The companies that provide the ads for the shoe company, they get ad revenue, and the shoe company gets the sales. I get nothing. That's generally becoming an untenable proposition in the West. There is little doubt that the day of reckoning for the likes of Facebook and Google are not far in the offing. Europe has taken the lead in these regards, with the U.S. taking up the rear, as her antitrust laws have not been significantly overhauled for over a century. The last time we had any major overhaul, it was the Sherman Antitrust Act of 1912. But overhaul will come, and with it, the overdue adjustment to the perceived arrogance and inequality fostered by the tech gargantuans. Barbara asks, what is so unjust about the tech gargantuans? It's a good question. I'll just answer shortly, Barbara, by saying this. And again, I hasten to point out, this is my opinion. I don't represent the firm here. This is my opinion. I could be wrong. But in a society where these people are paying no taxes whatsoever, keep in mind that, and it's legal. They're not thieving or stealing. This is a legal thing. The Congress of the United States, and largely around the world, has been bought and sold by the lobbyists. So the Fortune 500, for example, pays no income tax. They make zillions and trillions and billions of dollars all over the world. They pay no income tax in the United States, at least. And most of them are headquartered in Dublin, where they pay next to nothing either. Now, it's to my mind, when these barons just as they did in the turn of the 20th century when the steel baron Carnegie built libraries all over the United States, or Rockefeller set up the Rockefeller Foundation and the Ford Foundation, etc. The idea that these people have so much money that they're generous with it and they become philanthropists does not excuse the fact that they pay no income tax. In my estimation, and the estimation of many, the idea would be for them to pay into the system and let the government take care of the problems that they're taking care of. I don't need Bill Gates to cure malaria. The National Institutes of Health can do that. The NHS can do that. Let them pay their fair share and let the governments and the people who elect them do the job for the people who elect them. I don't need Bill Gates curing malaria. I don't need, you see, that's my point, Barbara. Again, that's my opinion, and the opinion of many, by the way. The difference in the cases between the Democratic West and the CCP is a matter of means, not ends. So the CCP is doing what the West will take much, much longer to do, but they're doing it in a very heavy-handed way because they don't have to answer to the people. This means the means at the disposal of an autocratic dictatorship where no accountability, at least at the polls, exists, is the speed, ruthlessness, and complete disregard for rights or due process with which it can prosecute its aims, as opposed to the slow consensus building required in a system beholden to the wishes of voters and lobbyists and subject to the rule of law. Xi's motivations in bringing down his megatech gargantuans was not wholly dissimilar from those the Western democracies are considering. Did anybody watch Mr. Zuckerberg's testimony in front of the Congress about, that's been 5-6 years ago, or also for that matter before the European Commission in Brussels? He was an arrogant little prick, you'll pardon my French, and he made it clear that he felt he was not beholden to these people. He wasn't talking just by way to grandstanding politicians. He was talking to the people who wrote the codes on the businesses that he makes his billions from. He wasn't talking to just any legislator. He was talking to legislators who knew the circumstances under which these people operated and profited. He treated them with such disdain that it was clear to me at that point that regulation was bound to occur, and it will occur. Perhaps with the distinction that in the West, the resistance to the tech rent collectors is more a matter of equality and undue rent or wealth accumulation, whereas in CCP land, it's the threat to CCP authority that is perceived to flow from the same abuses of market position. When Xi shut down Alibaba and its fintech operation, it wasn't because he was concerned about the inequality that was being created and the fact that Jack Ma was a multi-billionaire, but rather that Ma's empire could pose a threat to Xi's empire. Bottom line is that the crackdown on firms like Alibaba, Tencent, Didi, Baidu, and all wiped out nearly $1 trillion, that's with a T, ladies and gentlemen, $1 trillion from the market capitalization of these firms. Now, lest you think that that's just money from vapor, that's out of people's pockets. That's out of the pockets of working Chinese people who bought that stock, thinking that they would be part of the capitalist system. And no, sorry, goodbye, profits. Hardly an endearing act by the party on behalf of its people. This, by the way, is the ruthless and formidable Komodo dragon, which I use to represent ruthlessness. Looks pretty ruthless to me. Now, the second is the headwind pushing against the Chinese economy, is the zero tolerance for the COVID-19 virus. Arguably the most egregious of the three headwinds, this method of dealing with the pandemic is causing continued retardation and stagnation in the overall CCP economy. This is so for the simple reason that at the discovery of each and every case of the virus, any and all citizens near, in, or around the discovery site are placed under severe house arrest. Entire cities are locked up. The city of Shanghai, population 25 million, just came out of house arrest a few weeks ago after being entirely quarantined for months on end. Wenzhou is still under lockup weeks after the first case was reported. Overall, it is estimated that currently there are over 313 million Chinese citizens under house arrest. This situation is rigidly enforced, entirely unrelenting. No exceptions, no leniency, no compassion, and certainly no justice. You think this is endearing the Chinese people to their leadership? I think not. Just asks why are they so afraid of the virus? Why are they so afraid of the virus? They're afraid because the vaccine that they've distributed is B grade, like so much of the Chinese products around the world. They're B grade junk. Some of the stuff they make is quality. Most of it is cheap junk, including their COVID-19 virus. It's not based on the mRNA technology. It's a different technology. And most egregiously, they've inoculated the young people. They've neglected to, they haven't forced the old people to get inoculated. And that's the reason, really, Herb, the real answer to your question is they fear, they have a crummy health system. It's weak, it's underfunded, they have no safety net there at all. They don't have any social security. They don't have any old age pension. The old age pension in China are the children. And they would be so overwhelmed by the hundreds of millions of deaths of the elderly if this pandemic really broke loose like it did in the West, that they can't risk it. They just can't risk it, so they have this policy. Did I answer your question, Irv? Good. There are two essential reasons for this ham-fisted approach to a problem. Oh, I'm sorry. Here's the answer to your question right here, Irv. I'm sorry. To a problem the world has largely now overcome. First is the Chinese vaccine. I'm sorry for this, ladies and gentlemen. I apologize. I'll make this quick. The first is that the Chinese vaccine is not the mRNA type. That's the ribonucleic acid type. It's based on DNA or RNA in this case. It's significantly less effective at treating the virus than those from the established Western vaccine manufacturers. Second, the Chinese healthcare system, such that it is, cannot handle the kind of stresses the Western ones did at the outbreak. Keep in mind that many of the developed world's most advanced systems did not cope well at the beginning either. Only once the method for treating the disease, that is to say with the ventilators, was understood and finally a vaccine became available, were they able to get a handle on the pandemic and begin their return to economic and social normalcy. Today, outbreaks that caused the house arrest of millions in China wouldn't even register on the radars of major Western cities, let alone require the draconian responses they do in CCP land. The Chinese have focused their vaccination efforts on the young. I'm sorry I didn't read this before. Possibly in the hundreds of millions, not only would overwhelm the feeble healthcare system, but initiate dreaded mass protests and the requisite heavy-handed response by the CCP, possibly causing further protests, leading to open rebellion. A truly frightening possibility for the CCP and one that requires zero tolerance. Finally, there is the mammoth elephant in the room. The housing crisis. Sorry. This ticking time bomb has been in the gestation phase for years. It came to our attention many years ago watching a documentary on China, which simply in passing showed an entire city constructed, fully equipped with schools, clinics, hospitals, commercial properties, and huge numbers of residential apartments, uninhabited, empty. Curious about the phenomenon, a small amount of research revealed not only the veracity of what was caught in that glimpse, but also the existence of dozens of such cities. This is the result of politically allocated capital. In the market system of capital allocation, the lender for the construction of so much property based on the expected return or profit on the capital lent out for construction. I'm sorry, would be based. In other words, the lender would say, well, who's going to habitate this? Are these people lined up to pay? What about the financing of all this, et cetera? Normal considerations for property development. In a command system like the CCP land, capital is allocated along lines the political system considers worthy, with nearly no considerations for economic or financial results. Dozens of unpopulated phantom cities are the result of such policies. The overhang, the weight of the unpaid, well, I'll just read it. The overhang that so much incurred yet unfunded debt carries on the books of the nation's financial institutions is nearly impossible to calculate. Regardless of the precise amount, it is clearly enormous and potentially devastating. Previously considered sound real estate development corporate giants like Evergrande, the largest property developer in the world, I might add, certainly in China, have repeatedly defaulted on their foreign debt obligations and have been prevented by doing similarly on their domestic debts by repeated government bailouts and soft-term handouts. This can only go on for so long before the house of cards collapses, leaving tens of millions of home purchasers holding the bag because so many of them prepaid for the apartments and now have no possibility of receiving the property they have paid for because the companies building them are bankrupt. Not only is this a threat to finances of the nation's banking institutions, but even more potentially destructive, but is a harbinger of the dreaded disorder and erosion of faith in the ruling elites. So, as is our objective on all our presentations, we ask the proverbial question, is this tradable? Let's have a look at some assets that are affected by the situation in China. Well, yeah, we'll just leave it at that. Let me just switch screens here one moment, and let's open the floor to some questions, of course. All right, then. No questions, ladies and gentlemen. I will just keep barreling on through. Now then, let's take a look at some Chinese assets. The first and foremost, of course, is the yuan, the Chinese offshore renminbi. Now, this is a weekly chart. It's just as dramatic on the daily chart. Have a look. Oh, excuse me. This is the dollar yuan rate. I don't have enough data here, I don't think. If I do a monthly chart, I only go back to 2014. But it's way above even, you know, an 8-year high. It's an 8-year high. It's in a much higher high, but that's the longest data set I give you. But it doesn't matter. From here, from early February, at the turn of the year, when inflation started to take off in the United States, the central bank started to raise interest rates, and the U.S. dollar became strong. Let me just get the boom sound effect. That's what happened to the dollar yuan rate. It goes through the ceiling, and we think it's likely to continue. Let me just say, in the interest of full disclosure, these are the capital markets, ladies and gentlemen, is risky. And even though this looks like a sure thing, there is no such thing as a sure thing. Risk is defined as the probability of the unexpected occurring, and occur it does. And you should only be trading with money in the capital markets you can afford to lose, because you're going to lose. Everybody loses. I lose, we all lose. Nobody makes money in this business without losing money. It's just inevitable. It's like that's just the nature of the business, as in many other businesses. Nobody becomes a successful athlete, a competitive sportsman or sportswoman without losing. You can't do it. You have to learn how to learn from a loss and not make it a total loss, just like you have to learn from a loss in the markets to keep it from being a total loss. Make no mistake, there's risk here. So, enough said. Anyway, we think this is likely to continue. This is a weekly chart. I'll give you the daily chart even. It's well above the 200-day moving average, the 50-day movies, the 20-day movies. Even on the weekly, it's miles above all of the exponential moving averages. And here's the kicker. Look at the volume. On tremendous volume. That means that there is a great deal of sentiment behind this. That means that this is just not, look, as it fell, as it got stronger after the pandemic, this is the fall of the yen got stronger because of the tremendous orders from trapped citizens for goods, but the volume was nothing to write home about. Once this situation gets going, the volume is tremendous. In other words, a lot of people think this is a good trade. That clear? Any questions, ladies and gentlemen? So that's and just since we're talking FX, I just want to point one crucial thing out to you. And that's the US dollar index, all right? This is an index of the strength of the US dollar. And I can give you more data here. This goes back, this data set is, I don't know really if it's that much longer. It goes back to 1999. It gives you, this is 20 years of data. It's at a 20-year high. Let's call it a 20-year high. Strength of the US dollar, okay? Again, tremendous volume. So that's just something you need to know. A lot of the currency moves are on the back of a very strong dollar. Now let's take a look at some of the stocks particularly. So we know that the currency is weakening because of the misery that's taking place in China. Let's take a look at some of the more famous, well-known Chinese firms. We'll start with Baidu. Baidu is the Chinese. That's a four. I'll give you. We'll take a look at the weekly. Is the Chinese Google. Here's the crackdown. It happened in July, August, the third quarter of 2021. 2021. You can see it starts here. We don't think that's going to return. We think that the crushing of the tech giants and their desire to grow is going to keep them depressed for some time. Baidu. Let's take a look at one that's perhaps better known. This is the Chinese what's Amazon. This is the Chinese Amazon. I'll give you a better. Oh, this is. I can compress this. Give you a little more data here. Okay, same thing. Third quarter of 2020. Why would this be happening? These are vastly profitable tech giants with a population much, much bigger than the United States. Why would they be failing so? Because the Chinese government cracked down on them. Okay, this doesn't start in 2022 where the rest of the Western markets, and just to give you some equivalent, I'll show you, I will show you Amazon. Find it, Amazon. Now, Amazon is down since January. This is January 2022. No, excuse me. His January 2022. This is the fall. This is universal. All stock indices sort of track this, but it's not nearly what Alibaba has suffered. So, and I'll give you one more just for the sake of thoroughness, and then we'll open the floor to some questions. You might know this one, you might not know this one, but it's an up-and-coming electric car manufacturer called NIO. Why would an electric car manufacturer not be doing so well? Again, you're going to find it's January 2021. Why would it not be doing so well? Because the Chinese have reined in their giant tech companies. That's why. Questions, ladies and gentlemen. We think these stocks are good shorts. We think that buying dollar yuan rather, is a good move. And let's take a look. Even we could look at some of the associated stock exchanges. You won't see as radical, but if we look at the Singapore, for example, Singapore 30, that's a weekly chart. It's been headed down. This is the where's the pandemic? This is the pandemic. It actually went up into the pandemic, and this is the beginning of 2021, 2022. Here we go. It goes down. So that's tracking pretty much Amazon and this is pretty much what the S&P looks like too. So the Singapore, the Nikkei was doing very well, but is falling also, not nearly as radically. The Nikkei is doing well because of the weak yen. The yen is very weak, by the way, those of you who follow the signals and what's going on know that the dollar yen has been a great trade, very profitable lately. Again, for monetary reasons in China and Japan, we won't go into. So, ladies and gentlemen, let's open the floor to some questions. Anybody understand? Does anybody have any questions about shorting? Except for the dollar yuan, every other trade we looked at today was a short. You sell it short. Everybody understand that? You have a good grasp on that concept? You're a shy group tonight, except for Barb and Irv. Anybody? Okay, you don't have to ask questions. It's not mandatory. Let me just mention to you that you'll notice on the control panel there's something called polls. I'd like you to fill out the polls. There's 5 easy questions. Won't take you a minute. They're multiple choice. You don't even have to write anything. And then at the end, there's a little survey of about 5 questions, I think. Oh, 3 questions even, I forget. Again, it'll take you less than 2 minutes to fill it out. That would be helpful if you could do that. We base a lot of our decisions about what to present on those survey responses. So it's a way for you to have an impact and choose something you'd like to hear. It could be a technical, macro, whatever subject you'd like to hear exposed. We'd be happy to present it. And finally, let me say that our next broadcast is on Friday the 7th, next Friday, our usual monthly live non-farm payroll report, which is a live trading event. It's been very exciting lately. We've done very well out of it of late because the numbers have been stupendous, really, really, really outstanding. And so it's been a good trading opportunity. Again, it's not a guarantee of continued similarity, but we do expect a large positive number, and that has a easily translatable effect on the US dollar, which is how we trade it. So, ladies and gentlemen, let me wrap up by saying that for our regulars, we're always humbled and deeply gratified to you for patronizing us as your online brokers. It means a lot to us. It keeps the lights going. It pays our that we continue to offer you value for your money. For those of you considering opening an account with us, please consider this kind of work we present tonight as exemplary of the kind of work we do generally in all different realms for our clients. We produce and all sorts of communications and updates and general market information to help you in your experiences here in the capital markets. And even if you're just a casual trader looking for a little fun and excitement, please consider opening an account with us. We're stand-up, honest, upright brokers that do the best we can for our customers. And let me say again, in the interest of full disclosure, we're not right all the time. We make plenty of mistakes, okay? We lose money like everybody else. But the sine qua non of success in our business is making money than you lose. And that we can do. And that we do over the long run. And so considering opening an account with us, ladies and gentlemen. So with that, I'm going to bring the session to a close. I want to thank you all for participating. And on behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. For now. Oh, I see a number of questions. It's gone in the wrong way. Oh, I'm sorry. There are a whole bunch of questions. I'm sorry. Let me get to them now. The thing was listing them from top to bottom instead of bottom. When would you think is a good moment to invest in the Chinese stock? Sell it short, Luke. I'm sorry. Sell it short. Don't buy it. Sell it short. This is not that long. The whole world is a good short at the moment. You're damn good about that, Andreas, and getting better, except for energies and the U.S. dollar. Thanking you, Alex. Thank you very much. Kate, also, thank you. Thank you all for your kind words. All righty then. Those are the questions. I'm sorry I missed them. I wasn't looking in the right place. Do you think the Chinese economy will go better or worse next year? Worse. These are long-term problems, Luke, and they're not going to be solved quickly. Particularly, and let me just digress by saying one thing here, Luke. That is, there is a small, and I repeat, a very small chance that Xi will not be nominated or reelected. I don't know how it could happen. It could happen, but it's unlikely. And that will cause, in the short term, some upheaval. But in the long term, I believe it will be very good for the Chinese economy because it'll get back to some more sane, frankly, management, some more sane government. But assuming that doesn't happen, which is really the smart bet, I don't see any improvement. This guy is, again, he's not a policy genius. And he's cultivated, as all of these guys do, loyalty above and beyond all. So, no, I don't think the prospects are good. All right, ladies and gentlemen, thank you again. And I thank you all for your questions. I really appreciate that as well. So, ladies and gentlemen, that'll do it for now. They're funny. They're coming in weird places. The whole world. Would you consider ETF China related? Only if you're shorted, Eddie. Would it be worth doing DCA on some of these tech giants? What's DCA, Joyful? What is DCA? I don't know what that is. I wonder why it's listing them this way. This is a very weird thing. Okay, look. Okay, I don't know what DCA is. Dollar costing average. I still don't know what it is, Joyful. Dollar costing average. I don't know what you mean. Sell it short. Sell Chinese assets short and accept the yuan, buy dollar yuan long. It's weakening. You think the Chinese will? Okay. My pleasure. My pleasure, Joyful. All right, then, ladies and gentlemen. That'll do it for now. Yes, yes, Barbara. The session is being recorded. You'll get a link to the recording if you want to listen to it again in an hour or so. All right, then. Okay. Nighty night, everybody. See you soon. Bye-bye.